I've grouped the insurers together, and this is the complaints as a percentage of book in force that we see. So we see the predominantly bank assurance players, so ourselves, Star Union, Dai-ichi, India First, IDBI Federal, at the top in the green, actually have a lower incidence of complaints. People with a more of a combined model of agency plus banker, they sit in the middle in the orange, in the yellow, and in the sort of the pinky color down the bottom here, people with a higher agency share seem to have a higher volume of complaints. So my data, and well, it's not my data, this is IRDA data. IRDA data illustrates that bank assurance has a lower incidence of complaints. Why is that? I think it's for a couple of reasons. Number one, because the bank has a relationship with the customer, you can't damage the customer because you'll damage the whole banking relationship. Bankers have a responsibility in a relationship to their customers, and so they're going to look after their customers. And they don't, number two, they don't have to sell insurance today in order to maintain the business. If the customer doesn't want insurance today, they don't have to sell insurance today. And my analogy is, imagine you're at a party and somebody comes up and says, "Oh, would you like a drink?" And you go, "No, thank you, no, not today, not now." That doesn't mean you don't ever need a drink ever, never again. It just means you don't need a drink now. Similarly with insurance, in a banking environment, if the customer doesn't want insurance today, that's okay, because the bank's going to be there and the bank can meet that need when it comes through. Okay, let's look at some economic data and insurance density. I love insurance density. What I've got here is a spread of insurance density against GDP per capita. And you can see there's a clump of emerging countries down the bottom here. And let's face it, there's a difference between emerging countries and developed countries. You can't compare the two, and you can't say, why isn't India like UK or France or USA? The answer, because it's big, it's different, and it's emerging. So what you see here, and I've just exploded that bottom group here, is that there's a line here. You can see a trend that as GDP per capita grows, so does insurance density. And if you've got 80 crore people on less than $2 a day, actually they're not going to be buying insurance. No, the priority for those folks are food, shelter, and perhaps livestock or crop insurance, but not life insurance. As the country emerges and grows, insurance will come too. But I think we need to separate cause and effect. If we look at urbanization, it's the same sort of story. As a country increasingly urbanizes, so does the insurance density go up. If we look at Human Development Index, so Human Development Index, which is things like literacy, infant mortality, access to clean drinking water, again, as a country develops, so does their insurance density. So what I'm arguing is actually we will see growth in the insurance industry and we will see growth in insurance penetration, not because we're going to sell more insurance, but we're going to see that as the country grows and emerges. So the priorities, and their slow burn priorities, are education, healthcare, sanitation, clean drinking water, managing an increasingly urbanizing India, and then we will see insurance density increase. So, key takeaways. What do I want you to take away from this? Insurance is a business model. It's not a channel. Complaints are fewer in bank assurance. Data evidences that. Economics drives market development. Bank assurance has lower costs, and therefore the savings can be passed on to the customer in a greater value proposition. The more that as a bank assurer that we can integrate systems and processes to reduce our costs, the more value we can give back to the customer. And the final thought that I'd probably give you is that activating branch networks needs investment of time, dedication, love, and constant attention. I can't take my banks for granted. I say that one hand washes the other. I can't live without my banks. I don't exist without my banks. You can't do the one-handed clap. Okay, so I can't exist without my banks, so I have to invest time, dedication, love, and constant attention. And if you're working with the banks, that would be my advice to you. So that clock says 0, and the next slide says thank you. So thank you very much.
Thank you very much, Mr. Holden. Well, ladies and gentlemen, on that note, I'm going to request Ms. Sunita Quadros to please present a memento to our speaker, Mr. Holden.
Nice to meet you. Oh, very good. Had a bit of a technology crisis. Okay.
And can we keep that applause going one more time, ladies and gentlemen, for a very crisp presentation and some wonderful insights there, shared by Mr. John Holden.
That's very kind. Thank you.
Thank you very much, sir. I'm going to request all our delegates to also please connect with Mr. Holden offline for any further queries. And with that, we also have a little announcement for all our delegates. Our next set of panel members are all set for another very insightful panel discussion. We'd like to announce that our panel members, in fact, have obliged to ensure that they keep the panel discussion in 45 minutes, so keep it very crisp for all of us. They also have a flight to catch, so I'm going to request all our delegates to please be seated. We're about to begin with the next panel discussion. Now, without any further delay, we're about to begin this panel discussion on use of smart technology for cost optimization. Firstly, I'd like to invite our moderator and speaker for the session. Can we have a round of applause for Mr. Amit Kumar, Principal, the Boston Consulting Group. May I also invite our next set of panel members, Mr. Thompson Thomas, Senior Vice President, Business Systems and Technology and CIO, HDFC Standard Life Insurance. Mr. Aditya Sharma, Head Digital and Direct Marketing and Web Sales, Bajaj Allianz General Insurance. Mr. Yogesh Gupta, Senior Vice President and Head Sales, Bajaj Allianz Life Insurance. Mr. Girish Nayak, Chief Customer Service Operations and Technology, ICICI Lombard. Mr. Kolla Suresh, Head IT, Religare Health Insurance. And Mr. Snehil Gambhir, COO, Aviva Life Insurance. Can we have a round of applause from the audience for all our panel members here? And keeping with the timeline that we all have this afternoon, in fact, our panel members have obliged to ensure that they crisp down their panel discussion. So I'm going to thank you very much, gentlemen, for that. And very quickly, I'm going to hand over the proceedings to our moderator and speaker, Mr. Amit Kumar.
Thank you very much. We were debating that we are the session standing between all of you and lunch, so we'll try and be as crisp. We were laughing about it, but the spirit is that we'll try and do a Twitter, oriented panel discussion. 140, maybe not 140 characters, but maybe 140 words or less. So my name is Amit Kumar. Thank you very much for joining us for this discussion today. Before I start, going to the panelists, I just wanted to make a few points. I think technology is very big today. If you look at any statistics, if you look at number of mobile phone users, people on social media, the numbers are big and the numbers are getting bigger every day. We as BCG had done some research and we looked at the kind of cost optimization that companies can achieve. And our estimates are that companies, if they go the whole hog, if they really deploy technology to the extent that it is possible, can have a cost advantage of anywhere between 20 to 30%. The question is everything being done? Is the industry really capitalizing on what is available today? And for that discussion, we'll go to all the panelists. To keep the discussion structured, we will try and talk through the entire value chain. We'll start talking about what's happening on the product front. From there, we'll go on and talk about marketing and branding, followed by sales, followed by operations, and then risk management. This will keep the discussion focused, and I would invite you to ask questions towards the end of the panel discussion. So to start with, let me go to Mr. Sharma and just ask the question on products. What is your perspective on what's happening on the innovation front? How has it changed over the last 4 or 5 years?
Thank you, Amit, and good afternoon to all of you. I think first of all, I would like to clarify that digital is not one medium. It is way of life for all of us. For us as insurer, for us as company, we take all digital platform into our day-to-day working. So while coming back to your question on products, if you see typically in insurance, not only in general insurance, the products were designed on historical data. Generally, actuarial people used to come with their data and that it has happened in the past and now this is something which we want to offer. So we started using the digital mediums in data and our analytics in 2008 and 9. It typically was the same time when the general insurance market got de-tariffed. So after getting it de-tariffed and everything was there, on historical data, you were able to predict few things, but at the same time, customer was somehow missing. So with digital platform coming in, digitization coming in, customer also was brought into the product development because it was very easy now to do a survey by which you can check the pulse of the customer, what is their requirement and how the product will fare in the market. And at the same time, you can engage the customer by various mediums, be it social media, be it some other mediums, where you can get the customer feedback directly, even on your website also. So it has impacted the product development piece of it, and we have started developing products as per the customer requirement. You must have seen in the past now, people have started selling different products on online platform, which is different from the normal products which are being sold by other distribution channels. So if you go to buy a term insurance now, I think you will have differentiation in rates, you will have differentiation in coverage or medical tests while you go online and use it through the digital medium. Another thing which is making a big impact now is big data. After big data coming in, now we have also started using the big data technology into our customer and product formation, where you can check the social profile of the customer and their requirement. So it is impacting the product development tremendously, which was not the case earlier for us as an insurer to develop product as per the need and requirement and maybe lifestyle of the customer. Now you can very well predict the lifestyle of the customer by using telematics. You can check that how much kilometer he is running his car. So all these things are helping us, and the product development is going through a sea change. I think it is just the beginning. We have a long way to go.
Thank you very much. Mr. Gambhir, are players really capitalizing on digital platforms to revamp their marketing and branding? You know, people talk a lot about it, but is it really happening, and how do you see it changing over the next 3-4 years?
I think, as you mentioned, you know, India is, and John, I think, summarized as well, India is a mobile-first economy. I think the entire world is moving to a higher concentration of devices, more and more information, whether it's our personal lives or professional lives, is sort of entangled in the digital world. I think as of recent statistics, we have roughly 200 odd million internet users in India, third largest in the world, right? We've got about 100,000 Facebook users, in 100 million in India alone. From our perspective, we recognize that social and is a key part of our digital strategy. And digital in today's world, I think, doesn't have any boundaries vis-a-vis functions. So all functions are equally involved on the digital side. And I think in a resource-constrained environment like today, leveraging social media to be able to get a bigger bang for your buck or to be able to punch above your weight is critical. If I take Aviva as an example, we today have roughly the fourth highest number of users in the Facebook in the private life insurance category. We have the largest number of users on Twitter and on YouTube, roughly 10,000 Twitter plus and 5,000 plus on YouTube. We see a huge amount of influence that we have been able to drive amongst the target community we have, which is centered around young parents, child-centric activities. We've also leveraged our brand ambassador, Sachin, very well. He has a very strong social presence as such, and we're able to piggyback that with what we do and be able to get a far higher impact for us. Digital for us doesn't end there. The whole medium of how we draw people in from a service angle, whether it is online ability to serve people through messages on Twitter or Facebook or other, if you would open complaint channels like Mouth Shut, we engage and make sure that every single avenue of this space is covered by us, whether it's a positive where we're setting the agenda, or where we are responding to customers who have concerns. And for us, those are equally important. If there is information out there that a customer needs or has a concern with, we want to make sure that doesn't get blown out of proportion. So we do a strong amount of work there. We've also said that it has to involve all stakeholders. So if I look besides marketing and branding, our ability for our internal customer service professionals to be aware of what's happening on that world is very relevant. For us, social is not only about Facebook or Twitter. It's also about, can you do a web chat? Can you do can you make sure the customer gets called at his or her own schedule? If I want to call right now, I don't want to call into the call center. I want the call center to call me so that there's no waiting time. So we look at the entire ecosystem and say, how can we electronically connect with our customers, drive an ethos of service, and in that process, build ourselves to be a brand that is relevant in the digital world. And we found that, starting off on our online product journey roughly in 2011 or so, that the combination of being able to, build a branding presence online, whether it's a product page on Facebook, whether it is a Twitter handle that, connects with our customers frequently, does a lot of contests and reach outs, or it is tied to the fact that, we have a continuous stream of products that are launched on the online channel space that can aim and provide more and more options to our customers. All of that ties in. So today, when a customer comes in and has a thought of looking and considering for an insurance product, are we in the consideration set or not? Chances are, as John mentioned, that most of us, even though we may buy offline, are researching some part of what we want to do online, whether it is the company's claim statistics, complaint statistics, just product information, product comparisons. There's a lot that we will do on our own time, on our own way, whether it's a handheld mobile phone or a laptop at home when you're trying to make an investment. How that ends up in the end terminating is irrelevant. We know that the direction it's headed in is that people will start to do more and more and more, as we are all doing, online. And I think we've sort of bridged that and woven that together as we move forward.
Thank you very much. As we just